All right, guys. Welcome to my live stream. So we're gonna recap what I did, the watch list that I created on Sunday. Right. Today is Thursday. We've had around 4 trading days since my watch list. Usually, I'll develop and formulate my watch list on Sunday, create it, and then see how the watch list goes. Now, sometimes the watch list works, sometimes it doesn't. So basically, this week was a solid watch list. And how I develop my watch list, it could be different than other traders. It doesn't matter. It's what works for me, and I'm showing you guys what works for me, right? Um, Basically, the watch list, how it works for me is every Sunday, right, when the market is not running, I develop a watch list, and pretty much I scan for stocks and I take a look at them. Some stocks, it might be companies that I know. Some of the stocks might be companies I don't know. In all actuality, I prefer stocks that, companies that I don't know. Now, if I'm trading companies I don't know, it sometimes is better, because when we trade a company we know, sometimes there's bias into the trade. So sometimes I'll just look up different tickers and look at their charts. So I picked up, I'll screen share with you guys real quick, right? So this was my watch list that I developed on Sunday, and just give me a second. All right, so basically we had UA, right? So when we charted, if you look at my previous live stream, when I placed this on Sunday, right? UA stands for Under Armour. It was trading at $83 or $82. I'm sorry, it was trading as low as $81, right? Now, when it was traded at $81, my ultimate short entry target was at 85. I said 85 or higher. I said if it breaks around the 87 area, we're not going to play with the 87 area, because if it touches 87, right, we could be looking at 90s, around the corner. So yesterday, right, the S&P, the markets took another leg up, a small rally, after we digested what Yellen had to speak about. So Yellen spoke this week, right? So we saw the S&P touch, I believe, around 2065 or so. And so UA went from 81, as the price it was on Friday, and we hit 86. I think we hit 87. No, I think the high was 86 and change. And it, UA now is on our short watch list now, so it is floating and flirting with our short entry target, right? Now, do I want to short it when it's around 86? Not really. But now we could have wrote this. You guys could have went long, because ultimately, let's say I'm posting a watch list, a short entry target, and let's say the stock is trading at $81. Now, if I say short at 85, that means that I'm guessing that the stock is going to hit my short entry target, because ultimately that's the goal. So we could have rode UA Under Armour from 81 to 86. You would have had 4 points on that trade. So ultimately, it would have been a swing. So if UA was 81, we could have picked up the shares at 81, and now it is 86. You would have had actually around 5 points just on Under Armour. And again, this is a watch list from Sunday, right? Now, I said short it 2 ways: short it at 85 and 86, or short it at 79. So we hit 86. So we're at this moment right now, I am saying, Under Armour is a safe short. I don't have a stop loss at it, so we are short Under Armour at 86, because it ultimately hit our target, right? We're up about 5 points from last Friday's close. Now, so that leaves me with so UA was a success, right? API again was, I said not shorting until it breaks 55. Right? So let me just show you guys real quick, because it'll make it a lot easier. Okay, so we're going to do this, right? API, I'm kind of bullish on API. So let's, on Sunday, I said we're going to go long API. right? And if I pull up my my little watch list here, right? API, not, I said this again, this is, and I'm not bragging, I'm just trying to show you guys it's not hard. It's not hard at all. I'm not some type of master technician. I'm not a master or technical analyst. A lot of traders make themselves out to be some type of genius or guru. No, it doesn't take much, right? It just takes patience. The way that I develop these short entry targets, for example, Under Armour, on Monday, we were at 81. I said, don't short this till 85. Okay, it takes patience. That shows discipline, right? When you're trading, you're going to need discipline, because a lot of traders, especially short traders, and I look, listen, it happens to me all the time. You lose patience and you just want to short the ticker. You just want to short sell it. All you see is short, right? But I said short at 85. It's 5 points more than what it was on Monday, right? You got to develop patience. So API, I said not shorting until it breaks 55. I said go long at 63 to 64.75. I said the exit target is 60 fucking $6, right? So what did we close on API today? Look at this. Look, and again, I'm not bragging. I'm just saying that was my exit target. And that's exactly what we closed on today, was 66. And again, this is why I do my live videos, is to show transparency, and it's to show proof that I'm not lying over here, that because you could literally just backtrack on my last video and you could see this exact, watch list here. And I said go long at 63.64 and your exit target is at 66. You would have grabbed 2 points on that trade. We hit a high of 67. I said I see 70s on the horizon. Am I going to be greedy? No. I sold, right? Of course I'm going to sell because I had shares at 63, 63.25. I sold at 66. I'm not here to be greedy. I'm here to get on, get in at my entry and exit at my entry. If I sit here and try to play the market and say, okay, I want more than my entry, that's when you start to lose. This is why it's important. Get an entry target and an exit target. It is very important, right? We nailed. So far between UA and API, right? You would have nailed 5 points on this trade since Monday. You would have nailed, on the long side, and you would have shorted it. And I'm looking for around another 3 points short. You would have nailed around 3 points on API. That's around 7 points, four or five more, like 8 points so far just on these two tickers, right? A lot of traders have a hard time just trying to get a point on a day trade, whether they're gap playing or gap trading or gap, whatever it is they're doing, right? They're looking for 30 cents, 40 cents. No, we're not here looking for 40 cents. That's a trader playing for pennies. We're looking for dollars, right? We're looking for dollars. I'm not going to sit here and risk my capital, right, and play with pennies and play for 30 cents. Any trader that's trading and gets 30 cents to me is not a good trader. That's not a good trader at all. Anybody can grab 30 cents a trade, right? The good trader here is the trader that's going to get $1, $2, $3, $4, $5 a swing. That's what makes a good trader, right? Now, C's, right? I said we're going to go long above $21. I said ultimately the short entry is going to be around 20.30, right? I said your stop loss is going to be set at 21. Anything above 21 is going to signal a bullish trade on this, right? So again, we're going to look at C's. So C is actually SeaWorld, by the way, right? SeaWorld, I haven't been to SeaWorld since I was a little kid. I'm not even sure if I ever even went to SeaWorld, to be honest, right? So we're going to look at the chart here. I said, so once we cross 25, I said we're going to go long around 25, right? The high was 21.52. So if you would have went long above 21, you would have nailed yourself 50 cents, right? Ultimately, I do believe SeaWorld is a long-term short, but it showed a little bullish activity, and the short wasn't a good short, but the long, we got 50 cents long. I said once it hits 21, it's probably not going to close below 21, and it might break to 22. It's going to be very hard to go to 22, right? So we're going to look at the chart. So basically, I listed this on the 28th, and I said we're going to put a stop loss here at 21, right? So you see here we hit a high of 21, it was 21.50. So basically when we got to this point, I said once we get to 21, we're going to go up, and we did exactly that. But if you look here, if we look at the hourly chart, right, we broke resistance. We're out of the channel now, right? And this is what I want to show you guys. We're out of the channel. I do this so you guys can understand, right? Because what's a trader that don't understand technical analysis, right? This is just to make just so your eyes can see what I see. You see anywhere between here and here. So pretend like this is the top bun, this is the bottom bun, and this is the burger, right? You see, it was a perfect channel, but now we're above the channel. We broke channel. This is a bullish. To me, this is a bullish sign right here, right? And look at that. It's an engulfing and bullish. It's a bullish reversal. You see that? And hence you see where it started. It started around here, right? And this is the patterns that you look for. This is not no Timothy Sykes, hard, complicated pattern. This is a pattern that any eyes could have seen. And this is exactly why I said above 21 is and I did say 21. I could have said above 2038, but notice how I said the short target is going to be around 23. So I knew once it went above $20.30, it was going to be bullish. So I said long above 21, right? So it only makes sense to go long above 21. And you see here we go. We broke. We're in a bullish pattern. We're in bullish reversal here. We do have a gap to fill around this area. Is it possible? Yeah, it's possible to fill this gap on the next market, a market pullback. But you see, this is a challenge. So we could have shorted here, covered, go long here, sell, short, cover here, and it was a swing trader's favorite channel here, right? And here you go. And this exactly occurred today. So SeaWorld was a success as well, right? And again, I'm only overriding on, this is a watch list that I did on Sunday if you guys are just tuning in, right? So I said on 3M, I said you're going to short around 165, 164. Stop set at 170. I said it could touch around 167, 68. It's possible. That's why I on Sunday I said I'm gonna leave a high stop, and that's at 170. I don't want to go long on this at all. There is no reason for me to go long on 3M. 3M is the reflective. If you ever guys go on the highway and you see reflective images and on the cones and stuff, this is what the company produces. This is the company is 3M, and hence why they got 3Ms. So it's at 166, right? It's a laggard. I'll tell you this right now, and you guys could remember this. As soon as the market undergoes a pullback, this is a laggard. This is going to go down. This is lagging. The market has been bullish. The market has been ramping up, and this has been lagging, right? And another thing you guys should know is when the market drops, right? You don't short bullish companies. You short laggards. This is, remember now, if you look at, you guys should always have my watch list pulled up when you guys are watching my videos, by the way, or at least write down when I create a watch list. You guys should write it down on hand on paper. So I said short around 165, 164. I said stop set at 170. The reason why I said stop set at 170, right? And this is 170 here, right? 170 is a heavy resistance. It is a top. It looks like it has topped out at 170. If we look at the overall, it is. Let me take these dividends out. It is a good dividend stock, by the way. So it is a good stock to own on your long-term portfolio. But it's just, this is a good stock for me to short. I see it's lucrative. It could definitely bring in some change, right? So when I charted this out, let's look at the 30-minute chart. When I charted this out, it was here, right? It was the 28th now. The 28th was a Monday, I believe, right? And I said, we're going to short around 166, right? I look at my watch list. I said 166, 165, we're going to short. When we opened up, right, we opened up at 163. We went all the way down to 162. You would have nailed around 3 to 4 points on my swing. Short swing, that is. I said no long. There's nothing to long on this. I don't understand why it keeps going up. If we're even looking at the fundamental side, you know, they decrease. If we look at earnings and we look at fundamental side, I can give you the breakdown of 3M. Right, on the fundamental side, the 3M, you know, the CEO himself said that going forward, quarterly to quarterly, right, he does expect to see decline on revenue. There is no more the rally, you know, the uptrend should be finished by now. So whatever, we don't argue. I don't like to argue, and this stuff pisses me off. But we're not going to argue. I'm going to just remember we only trade what we see on the chart, right? And on the 28th is exactly when I published this watch list, right? And I said this is the watch list from 3/28 to April 2nd and 3rd, right? And we got down, bam, 163, right? 163. So you'd have nailed around 3 points. So that was a beautiful short as well. You would have nailed 3-4 points. So we're gonna label 3M as a success as well. Okay. So as far as Netflix, I said I would go long above 102.50. I said short entries should be around 100 to 98. I said stop loss set at 102. Right? You would have made money on both sides. I didn't really trade it. I am actually short I'm actually short Netflix right now at 102.50, right? Instead of actually going long, and I'll explain why right now. Initially, I wanted to go long at 102.50, right? So we're gonna pull up the chart. We went to 103. There's no point of trading shares, but with this, by the way, when we're trading Netflix, when we're trading Amazon, Google, and stuff like this, the money is to be made in options. There's no point of really trading the stock per share. Options is more liquid. You know, I'm not gonna say more liquid in options, but there's more money to be made in options when you're trading Netflix. Okay, we're gonna just put it like that. So Netflix, you know, people are bullish on it. You know, yes, you know, when it broke this right here, when it broke 96 and the market continued to go up, it was a signal to go long, but it's just a laggard. It just seems like it's lagging to me, right? So we're going to draw a new trend line, and, you know, it just doesn't seem like. Now it's like if we touch 104, we're gonna go long. That's what I would say. 104, 10. But as of right now, we're gonna stay short on Netflix. You see here, right? This was a long candle, a long green candle. From the point that we short at 103, 102 at this area back in January, it created a long candle from 104 all the way up to 118. But Netflix was, you know, it was a laggard. We didn't really make money off Netflix. So I'm gonna label this as a fail. But again, you would have definitely not lost that much money. You would have made money on both sides. You would have lost probably around 50 cents a share. You know, it's playing from 100 to 103. Okay, it's 2 points. The whole week it bounced from 100 to 102. That's a laggard. There's no money in that, right? So we definitely moved on. So Lulu, I had a short entry target at around 61.50, stop loss at 63. Ultimately, the short target, the target never even went down to. Lulu gapped up on, I believe it was earnings. I'm not even sure. So we didn't even really trade Lulu like that because it never really touched. It never touched our target. So again, if it doesn't touch our target, we're not going to chase it. So if it doesn't touch our target, we're just not going to trade it, right? And it didn't touch our target, right? So I didn't play it. I am going to go short Lulu. Again, I'm going to chart this out for you guys on Sunday. Lulu will tank. Trust me when I say that, right? You can be all bullish all you want. Don't forget, there's a Great Wall of China on top over here, right? So Lulu can have will need some good luck breaking above this resistance right here. Heavy resistance, okay? Resistance dating back from March March of 2015. Okay, we're in March right now. So for a year, this has been its top. Okay, Lulu will see some significant downside, but we're not going to trade it. Remember, I charted out in the 28th, and our target was not met, right? Because it gapped up the next day, so we obviously did not play it. There's a dark cloud cover bearish reversal. I don't pay attention to the investing.com technical analysis, but I'm going to agree with that one. I don't know that particular pattern or what that means, but we're going to short this very soon. I wouldn't even mind shorting Lulu at 67, and you can quote that. I wouldn't mind shorting Lulu at 67, and I'll tell you why. If I pull up this little useful tool, right? Let me delete that. Delete this. I don't know why it's lagging. Okay, delete that. Delete that. Okay, this is a tool. We're gonna go short, right? Now this tells me what my risk and reward would be, right? It's a pretty cool tool. TOS has this as well. So we're gonna do this, right? So now we're gonna short. Actually, let's do it like this, right? Let's say from the close, right? Say from 67.84, bam, right? So we're gonna short this. If the fuck. All right, hold on. Okay, so if we short it from here, right, we're risking literally about, on a swing, you're risking about 1.84%. So you're risking 1.84% of your capital investment to 8% on your short. Or we're not even looking for a gap close here. We're looking for something around 60. We're looking for something around here, right? We're looking to touch the bottom. We're looking at this this first line support right here. So you're risking 1.84% to 5%. This is a good short, in my opinion. You're gonna leave. You're gonna keep your stop at 70 because that's been a year-long resistance, and you're gonna try to cover up at around 64, right? So what is it? 60? Yeah, 64, 64.50. That'll give you a 5% on a swing. Is it possible? Of course. That's the type of trade you should be taking. This is a calculated short. It's very easy. We're at 67 now. Our resistance at 70, right? If we break 70, rule of thumb is you're going to go long because that has been a year-long resistance. Year-long resistance, when that resistance breaks, 9 times out of 10, it's always going to go up. It's going to rally above that. It's going to break out. We're going to call that a breakout. Until then, we're gonna say short, right? So we're gonna call this. We're not gonna call it a fail or a success. We're gonna continue watching Lulu, and I'm gonna change this. Well, I'm not gonna change this because then it would alter my watch list. But I'll go over it on Saturday. But we're gonna stay short. We still have short sentiment on Lulu. GameStop, I didn't even trade, so I don't even know what happened with GameStop. A&F, beautiful, right? So I said we're gonna short it at 31.75. And we're going to have a stop loss at 32. We did not touch 32 all week, thank God. I am still short 31.75. I did not cover yet. I should have covered. I could have covered twice. I could have played that twice. I could have shorted at 31.75 twice. I would have nailed it for over a point in total. I'm sorry, more than a point, $1.30 total. But I'm still short ANF. And let's pull up the ANF chart real quick. Also, guys, if you guys have any questions, you guys could, you guys could definitely ask questions on here, I think. Not sure if anybody asked any questions. No questions asked. Right, beautiful thing. Right, so I said short ANF at 31.75. I said we're gonna go long at 32. 32 is looking a little shaky. We were at 31.99 today, and that was a no-go, and it completely dropped, tanked after that. Right, so we're gonna look at the chart here. Remember, this watch list was developed 27th. This was for the 28th. Right, so when I pull up the chart, I don't care what happened before the 28th. I care about when I called it. Right, so the 28th was over here. So this was around the 28th. So we opened up here. Where is it? So we opened up here. It's at 31.50. 31.50. We went all the way down to $30. Right, and then we I said, patience. Remember, I said only short this at 31.75. So we're going to hide the marks on the bar. And well, first of all, let's do this. All right, we broke uptrend here. This is nothing but red candles here on the 30-minute. It just got heavily sold down. That's what I expected. So remember, I said short at 31.75. So we first entered here. This is exactly when we first hit 75, and we could have covered at 31.40, and then we could have reshorted back at 31.75 here and recovered here on the sell off. So that was a success. You would have only nailed about 50 cents if you would have exited at the targets, but I'm still short. I'm still short ANF. Most likely I will cover on tomorrow, depending, because tomorrow's Friday, so I'm not going to hold this over the weekend. But long-term ANF is a short still, right? So let's we're going to call that a success play. Hey, this was the failure. I did not lose. I didn't trade con. I said not seeing a short here, and obviously it was a fake out. So this was a bad call on my behalf. So it was definitely a failure here. This was pretty much the only failure of all the watch lists that was done. I said not seeing a short. I did not see a short. I said long price entry at around $16.50 and $16. I said stop loss at $15. Now $15 stop loss. So usually what I mean by stop loss is if my stop loss is triggered, that means you're going to go short. Did I call a short? I'm going to be honest, and I said no, because I said not seeing the short here. But my stop loss was 15. I said you're going to go long around 15.50. So you're going to risk 50 cents. Now, could have you made money on this? Now, if you're looking at this, you're like, all right, this guy made a bad call, but not necessarily now, because when I made this call, this was on Sunday. Monday, the bell opened. The market opened up on Monday. And you could have definitely made over a point on my call, because I said we're going to go long at 15.50 and we're going to sell right above 16, right? And it did just that, right? So if we look at the chart, right, we're going to look at the 30-minute time frame. We're going to go back on the 28th here, right? So the 28th opened up right here. We opened up at 16.19, and we hit 15.50, right? Now, let me see who's watching this, right? Is anybody watching this? Because, again, you guys got to see this, right? So the viewer that is watching this right now, this is what I want you to see, right? This is what I want you to see. This is exactly why I get hyped. Right now, I can't be lying to you, because the watch list is put up on Sunday, and this is the chart in front of me, right? So there's no magic tricks that is going on right now. I said we're going to go long around $15.50 to $16, and the stop loss is going to be 15, right? The 15.50 would have been your entry, right? So look at this. Look at the bottom here. The bottom was 1550. I don't make this shit up. Look, 1550 to the mark, to the T, to the penny. 1550, we would have went long and we would have sold at 1605. That's a 50 cent. You would have had yourself 1,000 shares. You would have made yourself 500 bucks, right? 1,000 shares would have made you 500 bucks on that trade if you would have waited. I wasn't talking about going long here. No, we're going to go long around 1550 and we're going to sell at 16. Obviously, we're not going to hold overnight when there's a catalyst. There was earnings. So, of course, I'm not going to hold a stock during earnings. And this is what happened. Earnings came out, and we fell all the way to $11. And, you know, we're uptrending, but I don't play gap downs like this. We're gonna say that's for losers. I'm not going to play this crap. This over with. That trade is over with, right? But ultimately, if you were swinging, you would have failed. But so this gives me the time to say, now, if you're swing trading and you're a new trader, when you are doing a watch list every weekend, right, and you're looking at stocks to play, please, for me, for yourself, for the sake of your account, just because you chart a stock out on your watch list, that's not enough. You want to make sure that the stock that you're trading, right, and if you're holding overnight, you want to make sure that that stock is not undergoing earnings. You do not want to hold a stock when there's earnings, right? And this is exactly what happened. Now, I would assume that you guys know that. I would assume that one would know not to hold a stock when they're about to report earnings. We're looking for a day trade. We're not looking for a swing trade on this, right? So we're not going to hold this. So if you would have listened to that, if you would have followed that rule, you would have missed out on this. This would have not affected you. And if anything, you would have went long around here if you would have wanted to play a bounce for a couple of cents. I don't play gap downs. Again, I very rarely ever play gap downs because usually there's a bounce to a gap down. Most of the time, this was not really a gap and go. I don't consider this a gap and go, you know, because a gap down ultimately when it opened up at 1220, it hit a low of 1167.50. That's not, to me, that's not a gap and go. A gap and goes that I played in is when a stock opens up $10 down and literally at the open it drops another 3-4 points consecutively, like a straight drop. You know, that's a gap and go to me. So I wouldn't play this, but again, rule of thumb is do not hold a stock, do not swing trade a stock that is undergoing earnings. You want to avoid those stocks. So we're going to go back to the watch list. I think I have one more. So PTLA was beautiful. Beautiful. I said we're going to short this bitch from 1950. We're going to short it all the way down, right? I said we're going to short it. 1950 was an automatic short. Why did I say 1950? 1950 on PTLA was a 3-year low. If it breaks a 3-year low, rule of thumb is it's going to make a new low, right? And it's going to make a much newer low. So let's look at the PTLA chart, right? PTLA, by the way, it failed P3 studies or some shit like that. I'm not really sure. Again, mind you guys, you should know that I traded a lot of biotech last year. Biotech was probably 90% of my trades. Most of my trades last year was small cap biotech stocks. So it went anywhere from Jern, BioC, INVO, you know, every biotech small cap stock I traded, I used to play just based on the catalyst of P3, P1, P2 results, FDA approvals. I'm very familiar with that. So P3 results, immediately I looked at the cash, they, you know, to see if they're a solid company. And I remember they had PTLA has about $186 million in cash as of last report, which was December 15th, 2015. I'm sorry. And they have about 186 million in cash. So it is unlike other stocks that I've shorted before. But I said that if we look at the chart here, 3-year low, bam. You know, 1950 was, let me see, it was over here somewhere. So this is it right here. Remember, so let me pull up my watch list real quick. I said short below 1950, right? And this is the 3-year low. You know, that's the 3-year low. And you know, I said that if it broke this, you know, it's gonna have a hard time. And I was actually expecting it to go much lower, considering it's breaking a 3-year low like this. Um, and you know, this is why I love technical analysis, by the way, and this is why people need, you know, sometimes just listening to Jim Cramer and CNBC is not enough. Ultimately, technical analysis, charting rules the market. Fundamentals come afterwards. Yes, fundamentals always comes to a point where it will happen. But if you're a new trader, this is perfect for you guys. Even if you don't trade every day and you trade just on trades just based on stuff like this, you'll never lose. You'll never lose. There's no way, right? Now, I'll explain to you why, right? So I said below 1950, we're going to short. So from 1950, we shorted, covered in the 18. It hit a low of 1820, right? So you would have nailed over $1.30 on your short. Average share per price, average lot is around 1,000, 2,000 shares. So you would have netted just on this trade around 2,000 shares. If you would have went in with 100 shares, you would have made $100. If you would have went in with 500 shares, you would have made $500. It doesn't matter. If you're a new trader, don't look to make $1,000 PL. The whole point of this video and my live streams is to get you profitable trades, show you that profitable trades do happen. Stop. You know, a lot of traders say, oh, well, a lot of day traders and swing traders lose. Yeah, a lot of day traders and swing traders lose because they don't follow the rules. A lot of traders that lose sometimes have a lot of knowledge and they're very smart and they're very good, but they don't follow these simple rules and they don't follow these simple things that I'm just showing you. This is very simple support, resistance, stuff that I use. I don't go and use a million different indicators and I just use support, resistance, a stochastic RSI, MACD, volume, that's it, and I'm good to make money, right? So 1950, I said we're gonna short. We hit a low, so we made over $1 on the trade. Now let's zoom in, right? We're gonna zoom in too now because we don't just go long. We don't just go short. We go long too, right? And then I said on my watch list, I said after we short this, we're gonna go long and we're gonna go long. I said long price entry, $20 for a bounce play, stop set below 1980, right? So let's look at the bigger picture here. So we gapped down, went up to 22. That was the power play, power short as well here. So from 22 short all the way down to 18. This I like to call a gap and go. This is a real gap. This is a real gap play. You know, there's a lot of gap traders that play like gap ups like UA. So the stock will gap up $7, right? And then so the stock closes at $61. It gaps up at $67, and then they bank on it for a point. What's the sense of that? Real traders just made 7 points on that trade, right? This is a real gap play here. So gap down, bam, bounce to 22. You're gonna short it all the way down to 18. I said if it goes above 20 and holds 20, we're gonna go long for a possible 24, and we're gonna possibly reverse. This is not PTLA. Again, I traded a lot of biotechs last year. This is not your average biotech. This is not a small cap biotech. This has a good balance sheet. $76 million, $76 million in debt. Total liability is $76 million on this company. $186 million just in cash. This is not your AVXL. This is not your BioC. This is not your Germ. This is not your PBMD. This has potential to go back, right? Is it? I mean, I don't know. If you look at the overall biotech sector, it's complete trash. Complete, you know, it's in the hole right now. I'm not going to look to completely swing, but one would have knew that this stock is not going to gap and go all the way down to 7, but 22 to 18, that's a real gap and go. That's a real gap play. So I said once it holds $20, which was around here, I said we're going to go long. It's on my watch list. I don't make this up. Look at that. And it held. It held. And let's zoom in. we're gonna zoom in on those candles, right? We're gonna zoom in on those candles and we're gonna see what they look like, right? I said above 20, we're going to hold. We're going to hold. We're gonna swing it above 20, right? So let's look at my watch list. I said long price entry 20 for a bounce play. Stop set below 1980. It hasn't touched 1980 yet. Once it broke past $20, and from 20 we could have sold at 2071. We had a high of 2074. We topped out double bottom. Double top would have signaled us the short here. Got sold off on the double top. Bam, you would have nailed it. Perfect play here. That's a perfect play. I said go long on 20, short below 19. So just on, if you would have just focused on this purely just for the whole week, if you would have said screw all your tickers, Jib, screw all your tickers, I'm just going to focus on this. I'm going to just short this below 1950, and I'm going to go long above 20. You would have made yourself a nice $2 to 250 points the whole week on this. It could have made your whole week if you would have went with 1,000 shares. You would have made about $2-3 grand on the week, right? That's highballing it a little bit, but that's enough. As a trader, you decide ultimately how much money you want to make in a week. But I'll tell you this much right now: traders that want to make $5,000 PLs, all right, keep dreaming, right? It just doesn't happen with everybody. Does it happen? Yes. Look at me today. I traded oil. 2 days ago, yesterday. I traded it, made $9,000 on crude futures. You guys can look me up on Instagram. It's on my Instagram. Made $9,000 going long on crude. I made another $5,000 today. Posted up on my Instagram. I went long futures, crude futures. When you trade crude futures, commodity futures is a little different than stocks. Start off with stocks, then go into commodity. Commodity is a whole different ball game. It's not for everybody. Am I a guru in futures? Hell no. I'm still fairly new, so I play it by ear. I only play what I know, and that's crude. I've been trading crude for a very long time. It might not be long to some. It is to me. I've been trading crude for about 2 years. So been shorting crude ever since $60, $70 a barrel. So I'm very familiar with crude. Ultimately, very bearish on crude, but I did go long. So sometimes I got murdered. I went short on crude. During the rally, I got murdered. So I'm going to be very honest with you. The $9,000 PL and the $5,000 PL to me meant really nothing because it's $14,000 within the whole week that I've made on crude. But I'm only making up for losses here. So I'm ultimately, for the past 3 weeks, or let's say the past month, I'm only really up around $4 grand on crude, minus the losses that I took when oil rallied. So in all actuality, I'm only up $4 grand this month on crude. Whereas if I would have never shorted in the first place, I would have probably been up around 30 grand if I would have went long 40 grand. So am I a perfect trader? No, and I'll be completely honest. So I took a break after I shorted oil. I was very disappointed with myself. I was very disappointed. I left a lot of money on the table. I left enough money on the table that whereas I wouldn't have to trade for the next 2-3 months if I went long on crude at 30 with crude futures. But hey, it happens. And I didn't beat myself up because I'm telling you this, come around June, when oil will meet its maker, I will be there to short it all the way back down. I will be there to short the S&P as well through the mini S, the SP mini. But so basically, yeah. So this week was a success. I will not be trading tomorrow. Tomorrow's Friday. Why? Because my whole watch list is filled. My watch list was success. And if I was to say anything, I would say that most of my watch list was a success as of yesterday. So I will not be trading tomorrow. I will be watching the market tomorrow. I will be compiling more stocks that I will be looking at for next week. Next week is looking a little shaky. The S&P is having a hard time breaking through the highs. We are at the highs right now, so it is starting to lose steam. So next week I will be looking at for more shorts to place. If you guys know me, definitely I will not be looking for any longs at this point. Maybe I'll start being a little bullish next year as soon as the market comes back to where it's supposed to. But as of right now, A lot of equities are at their not their all-time highs, but they are at their year highs. They are significantly above their lows. We could say that. So I would say with the market being at its high, if we're looking to swing, it only makes sense to go short rather than long. I was talking to people in my chat room today. They wanted to grab shares of Apple at 110. Why would you go long on Apple at 110? You're going long term. I completely understand that because I will be with you. I will be there. I will be going long on Apple when the time comes right. If you're going long term, if you say, and sometimes I feel like people just use that as an excuse to say, oh, okay, yeah, I'm going to go long term. Because it's an excuse because they don't really understand, first of all, what they're trading. Two, something like Apple has a direct relationship with the Asian market. As you saw, when the Asian market, took a fall, Apple shares took a fall. I think it hit what, $88 or $89 a share. Okay, now we're trading at 110. The long side has been completed. Okay, it's up $30 from its lows. What else do you guys want? You guys want to start going long when the stock is $30 above its highs? I'm sorry, $30 above its lows? No. Wait for the time, okay? The time is not right now to start going long. My retirement portfolio is completely liquid. I'm cash. Anybody that I know, look, listen, anybody that I know, I tell them, do not start buying stocks now, right? If you've got mutual funds, prepare yourself for a big hit. S&P is high right now. The market is high. It just doesn't make sense. And I took a break. I didn't trade for about 2 weeks because stuff is not making sense to me, right? And some traders say, oh, well, you know what, just trade what you see. Okay, I understand that. Trade what you see, but you have to understand, I'm not just a regular trader, okay? I understand fundamentals of the market. I study the market. I study it, okay? A lot of traders can't tell you, what truly moves a market. A lot of traders can't explain to you what a central bank is. A lot of traders can't explain how the market, when you have traders say, oh, the market is propped up, they can't really explain to you what it means or how a market can be propped up. They don't understand what, they saw the market give out. They can't explain to you why the market gave out. They'll say, okay, the technical analysis showed that it was going to give out. No, they just don't understand. So sometimes, yes, I trade what I see in the chart, but ultimately, and you guys should do the same way, if you guys feel uncomfortable, whether it's with the market or with a stock that you're trading, or even if it's a stock that I'm putting up on my watch list, right? If you don't feel uncomfortable, if you feel uncomfortable, you should never trade anything you're uncomfortable with, and never trade when you're uncomfortable. Okay, when you trade uncomfortable, you become hesitant. You start to see fog. You start to trade a little bit differently. I learned from mistakes, and that's why I took 2-week vacation. I said, look, listen, the market is not right. That's when the S&P was 2032. Look at the S&P. S&P is at 2060s. I knew something wasn't right, and that's not the type of market that I trade in. So I said, I'll take 2 weeks. Who knows? If I wouldn't have took a break in the 2 weeks, guess what? I would have been shorting the market. I would have been shorting the S&P at 2030. I would have found myself in a hole, in the S&P's at 2060. So it takes discipline. And I'm very proud that I took a 2-week break. It's very hard for me to ever take a break. It's even when I don't trade, I watch the market. I'm watching the market hours. Some people say, oh, I trade for 10 minutes, 20 minutes in the open, and that's it. I'm done for the day. Okay, two different traders here, right? You got traders that can tell you what's going on with the market intraday. You've got traders that I can tell you what's been going on in the market the past 2, 3, 4, 5 months consecutively, right? I've watched the market. That's just my hobby. That's my passion. So, yeah, I took a 2-week, and even now, I just feel very uncomfortable in the market. And the market, to me, it's going to come time. Obviously, April, it's never really been a bad time for the market. So I'm gonna go ahead and take my predictions and keep it clear. I'm gonna say that the market will start pulling back in correlation with oil. So you're gonna see oil hopefully start to lose steam around June. It's gonna pull back up though, but ultimately June is when I'm looking for my first free fall in crude. October, I'm looking by October, I'm looking for a very, very nasty market downturn. Elections is November. Traders, you're a trader, right? You're a day trader. Guys should really understand how elections affect the market, right? That's the beauty of doing research, right? You can sit down with a lot of stock Twitch traders and talk about stocks, but could you really sit down and talk with a couple people and really politic and go back and forth and say how an election will affect the market? Is it possible that the market rebounded truly due to an election? You got different conspiracies, but I think ultimately the election and the the winner of the election will have a very grave impact in the market. You got a bunch of idiots running, to be honest. You got, Donald Trump, you got Cruz. Sit down and really ask yourself that question or do research on the president. How can Cruz affect the market? How can Hillary affect the market? How can Trump affect the market? I'll tell you right now, if Trump, comes into power and becomes president, the market is going to go up. The market is going to go up without a doubt if he is elected president. If Hillary becomes president, the market is going to go down. I'll tell you that. Especially biotech. Biotech has not recovered and probably will not recover until investors know whether Hillary is going to become president or not, because she destroyed the biotech sector and she is coming for the biotech sector. It's like, she wants Judgment Day. She wants to judge all of these companies. So are we really going to see a biotech recovery till then? Probably not. So do I want Trump to win? Not really, but I'm just getting into politics now. So that's pretty much it for our watch list. We had a successful watch list for this week. Again, I'm not trading tomorrow, Friday. We'll be back Saturday on the live stream, and I'll give you guys a brand new watch list to look for. And we'll just keep continuing this, just success upon success and great trades. I will be, however, keeping Lulu on my. I will keep Lulu on. I will recycle Lulu on our next watch list. I will recycle ANF on our watch list, and I will be recycling PTLA on our watch list. I will also be recycling AEPI on our watch list and UA. Mostly the whole watch list except Netflix, GameStop, and CONN. Everything else is going to get recycled. I will add about another 5-6 tickers I saw this week that could be possible targets next week, depending on how the overall market handles itself, right? All right, thanks for watching, everybody, and I'll see you guys Saturday, not tomorrow, but Saturday.